Hello and welcome along to the next part of the course. Here we're going to be focusing on the real world gym industry. We'll be looking at some key facts and figures that will hopefully help us to draw out some insights that would apply to the pre-seen case and also to anticipate some of the issues that might arise in the case study exam in February. Before we begin, I'll just give you a quick rundown of what we'll be covering. So first we're going to focus on broad industry trends, growth, projections. We're also looking at the budget versus luxury segments within this industry, which are the two main areas or the two main segments, as we'll see, and also focusing on customers, some analysis, surveys and so on that pertain to customer preferences within this industry and some demographic issues as well. From there then, we'll move on to the industry structure. Primarily we're going to focus on the franchise versus the chain model, which dominates this industry currently. And we'll be drawing out some strategic implications from these two different approaches to the industry. Then we'll move on to some challenges that pertain specifically to this industry. Niche alternatives. CrossFit is an interesting recent development over the last 5 years. Really popular, increasingly popular fitness approach and model. It might be a threat to traditional gym structures. We're also looking at some safety scares and issues pertaining to health and fitness clubs and perceptions as well, and how these perceptions can be a challenge to increasing membership. And then we'll do some reflection on what we've covered, drawing out the most important implications from what we've seen and how that might inform some of the questions that will arise in the case study in February. Okay, so let's get into the industry trends. Let's just start with the general picture. Here's an interesting synopsis of the current state of things from Statista.com. Some of the key points here: they say the global fitness and health club industry generates more than $80 billion in revenue per year. And the US is the single biggest market, perhaps unsurprisingly, worldwide, not only in terms of revenue, but in regards as well to the numbers of health members, I should say, in health and fitness clubs as well. They go on to say that the global market is fragmented with no particular chain taking a large share. And this is a really interesting phenomenon, actually, and I'll come back to this later on and what the implications of this are. But certainly there is no single brand in terms of gym chains that is global and international, truly international in the sense of crossing continents as well as countries. And we can reflect on why that might be the case later on. We'll come back to that, but something just to bear in mind as we go through this analysis. Market leaders tend to be more local to countries and geographical regions rather than being intercontinental. So let's look at some historical growth trends here, and this includes a projection as well for adult fitness club participation in the US, which is often an indicator of trends coming down the line for other countries in the world. Health and fitness facility attendance has become the biggest adult sport in the Western world, bigger than football, tennis and golf combined. So that's an interesting insight there, that these traditional team sports, which are outdoor sports, all of these combined have less participation than a gym fitness club membership. So that's something that has really taken off in the last 40 years or so. And it looks like it's going to continue, looks set to continue into the future, both short and long term. So a fairly stable industry in that respect, very steady growth figures, and it's looking like that won't change anytime soon. So more recent growth, you can see here, we've gone from in 2006, 107 million members worldwide to 144 million members at present, and generating $84.3 billion per year. So that's in 2014. So a very healthy growth trend there, fairly constant growth, some slight delays, I guess you could say, in the middle there around the 2009, 2010, 2011 mark. Not entirely clear why that is the case, but since 2011 certainly that steady growth has returned, and we've seen similar trends since. Looks likely to continue in that pattern for the coming years. Now, an interesting insight here from fitness.com med. This is a good analysis into the demand versus the actual supply of gym membership and fitness clubs. It suggests that demand is actually outstripping supply for club memberships. Here you can see health clubs have a flatter average growth than the club members' average growth of 4% versus 0.8%. As membership growth outpaces facilities growth, more members leave fitness clubs due to overcrowding. So this is really important, and it suggests that there's huge room for growth, rapid expansion of gym facilities worldwide. As people become fed up with overcrowded gyms, they're keen to find another location that has maybe a newer location that has fewer members. So that's something that a chain, for example, will be very, very keen to keep an eye on and try to identify optimal locations for members who are find overcrowding in other facilities. So again, a very healthy industry in that respect. There's a lot of potential for growth, it seems, because demand seems to be outstripping the supply due to the overcrowding issue. So let's look at some more general overview and projections here. This is a snapshot from IBIS World's analysis. You can see this is focusing primarily on the US industry, but again, this is representative of most developed countries. So we've seen revenue from gym and fitness franchises grew by 4.9% over the last 5 years. The gym and fitness franchise industry is worth $2.9 billion in the US alone. Expansion is expected to keep pace at about 5.4% through 2020, so very healthy growth figures there. And it says here, baby boomers, interestingly, increased health awareness and disposable income will boost this revenue further by 2020 to 3.7 billion from 2.9 billion. That's the US, but we can expect similar trends to occur in other developed countries as well. Market segmentation. Now, this is a really interesting phenomenon here, and this is taken from Canada. Okay, so again, a similar market to the US and most other developed countries. And they're suggesting here that there has been a big squeeze on the middle segment of this industry. So high-end gyms are more or less stable in terms of their membership numbers. People still who can afford it still opt for luxury, and they like the luxury gyms. Luxury gyms are often a kind of have a spa environment, lots of facilities, jacuzzis, and spas and saunas and swimming pools and things like that. A lot of extra features. But most people aren't obviously opting for that, and the majority of people are opting for these new low cost gyms, which we'll be looking at in more detail in a few slides. But the middle has really suffered and is feeling the squeeze. The mid-range gyms, which are estimated to be between $40 and $60 per month, as you can see here. In the last year, 278 of these gyms closed in Canada. And you've had openings of 581 low-cost gyms by comparison. So a really huge drop in the middle range there. And these budget gyms are putting a huge amount of pressure on that mid-range gym. So something to bear in mind there as well. It suggests that there's huge potential for growth again. So we're moving then to another breakdown of the different kinds of gyms we're seeing here. Premium, mid-market, low-cost and independent. Just looking at the growth figures there on the right, you can see from 2012 to 2015, the low-cost segment had huge growth compared to the other segments, 58.8%. Now, the overall share is, at least in 2015 here, and this is based in the UK, again, another pretty representative country when it comes to developed nations, 10%, from 3% to 10%, but it's still a fairly minor share, as you can see, 10% of the overall, and the mid-range, mid-market still dominates, but that is shrinking, it seems, relatively very rapidly, and the low-cost chain is really pushing ahead, so it looks like that's going to continue into the next few years. Now, customer analysis. This is really interesting. Why people go to gyms, what kind of gyms they prefer, why they leave gyms. These are all really important pieces of information. Customer analysis is really central to this industry. Knowing what people prefer. And it's especially interesting from a psychological point of view because people are often very insecure about their physique, about their and how they compare to others, for example. When it comes to men, it seems the dominant concern or source of insecurity is their perceived strength and their perceived ability to lift more than other people, for example. And with women, often it's a case of feeling out of place in gyms. That's one of the common complaints that comes. So these are different kind of psychologies that have to be taken into account when designing gyms and when thinking about strategy. Really interesting to analyze customer behaviors and customer opinions. So here's one survey which was asking why people left or quit their former health clubs. Expense is a big one. Unsurprisingly, perhaps, people are primarily concerned about their pockets, but also convenience and location seem to be a big factor. Overcrowding, as was mentioned earlier, was another one. And I felt out of place. In terms of the psychological issues, this seemed to be one of the big ones. The biggest, perhaps, of the insecurities and sources of concern was feeling out of place. All the others are more practical concerns, for example, location, expense, and overcrowding. So we'll come back to that later on, but as you can see here, the takeaways from this survey, primarily the biggest considerations are financial, convenience in terms of location, and overcrowding and feeling out of place then on the kind of psychological side of things. So we'll come back to those very important points as we move through. Another interesting breakdown is the different behaviours of male versus female in general. There seems to be patterns here, as you can see. The routines by gender, perhaps unsurprisingly, men are more focused on weightlifting. Men also overwhelmingly much more focused on running. Women tend to be more interested in yoga, pilates, and group fitness or classes. They seem to be more interested in those. So very, very interesting patterns to consider there. More or less comparable in other areas, for example, cardio machines, swimming, cycling, and spinning. They all seem to be more or less equal. And competitive sports then, as you can see, men as well tend to be much more interested, relatively speaking, in that area. So we'll come back to that again because that's an important point from the strategic perspective. Keeping with the male versus female gender differences in terms of preferences for their gyms and for fitness regimes. Workout location by gender. Here we're comparing home, outdoors, gym, specialized studio, and hotel. And as you can see, women tend to be more inclined to work out at home, whereas men are less so. Outdoors, men are relatively more likely to participate in exercise outdoors than women are. In terms of gyms, more or less comparable. That's an interesting one. And then in terms of hotel and specialized studio, it seems again, specialized studio, men and women more or less equal in that respect as well. And hotel participation seems to be dominated by men. Not entirely clear why that might be the case. But certainly the most important one from the perspective of the pre-scene is gym participation, which seems to be comparable. But women are more likely to stay at home for exercise regimes. So that's something that might be important for the kind of atmosphere that's created in a gym. Exercise frequency then by gender, as you can see down here, we have rarely versus never, rarely or never, 1 to 2 times per week, 3 to 5 times per week, and more than 5 times per week. Again, here we see men relatively less likely to never or rarely exercise, women slightly more likely to rarely or never exercise. Then in the middle ground, things are more or less comparable. Again, 1 to 2 per week. Women more likely to train just 1 to 2 per week compared to men, and men slightly more likely to train 3 to 5 and 5 times per week or more. So let's move on then to the industry structure. This is where things get really interesting. There are 2 really dominant models in the budget area, which we mentioned earlier, which is really pushing on in terms of growth: the franchise model and the chain model. One example of a franchise model is the Crunch Fitness company in the United States. It's a chain that was founded originally in 1989 and has a very mixed fortune since its founding, which seemed to reflect the nature of the gym industry over the last 20-25 years. There's been a huge amount of change, especially in the last 6 to 7 years, as there's been this shift towards the budget gym chain. And the Crunch company has kind of tracked this very closely, this pattern. You can see it reflected in their fortunes over the years. They were bought by Bally Total Fitness in 2001 after they ran into some financial difficulties. However, they were unable to turn things around. They were found to be unprofitable, and they then sold to Angelo Gordon & Co., a private equity firm, in 2005, and then filed for bankruptcy in 2009. But since 2009, things have really turned around for Crunch Fitness, and they've really expanded rapidly based on their budget approach, their simplified model, and indeed their messaging and their vision has really improved things as well. And also they've adopted this franchise model, which we're going to focus on in more detail. Interesting history in terms of their early years. As I said, founded in 1989 by a former stockbroker, Doug Levine. Clubs became popular by appealing to young upscale members and featuring heavy promotions and marketing with some humorous and sexual connotations. They were initially profitable in large part due to successful promotion of the logo merchandise sales within the clubs. They featured some unusual classes such as pole dancing, bicycle-based yoga, co-ed wrestling, an abs, thighs and gossip class run by a drag queen, and capoeira, which is a Brazilian kind of dance exercise regime. So really quite bizarre and interesting mix and approach in the early years, in the first decade or so. And in some senses, they've maintained and retained some of those kind of quirky aspects, as we'll see, but they've become more focused on a kind of user-friendly approach, a more welcoming and open approach, and this is key to their success over recent years. So as we'll see here, they talk about no judgments. This is a really important logo, really important slogan, I should say. The no judgments idea has really dominated since around 2009. They put a focus on positivity, inclusivity, and fun. Try to encourage a relaxed atmosphere. And you can see here in this video that we're going to show you just what kind of image they project in terms of the customers that they're targeting, the kind of people that they want to come to their gym. So you can see here, very relaxed kind of approach, lots of people smiling, dancing. You don't see a lot of images of very, very muscular people or very, very hyper athletic people. They try to make it seem like it's an everyman gym. Our gym is your gym, they say. Lots of this kind of messaging, as you'll see. Further down then you have group fitness classes is the main focus, and that's the first thing that they mention, and that's an interesting one to keep in mind as well. As we saw in the previous section, that primarily women seem to be more interested in the group fitness classes, and that says something about their target audience as well. And you can see as well that the way they talk about weightlifting, it says things to lift, and that's a kind of very playful way of presenting that aspect of fitness as well. So you can get a sense from this video the kind of people that they're targeting. It's perhaps the beginners, the people who are less used to gym membership and who are perhaps not as competitive, people who want to have a kind of a social aspect and a fun aspect to their fitness regime. So that's the approach that they've taken, and they've had considerable success with this model, and they've decided to franchise the brand. And so you can see here, looking at their figures here in terms of their numbers and their intake and their revenues, they have $1,906,305 median gross sales per unit, that is to say per gym, franchise gym. Operating profit per unit of $444,000, median cash operating profit, that is. And median members then per unit is 6,440. This is for the franchised clubs that they send out across, primarily across the United States and a few other countries as well. They've broken into one or two other major markets, but primarily they're based in the United States, and that's where their franchising is really taking hold in recent years. So they've had considerable success here. They're quite generous gross sales and profit, operating profit margins, as you might say, for a single gym. They really push this franchise model, and they offer a huge amount of support as well, it seems. You can see here, before we get into that, just the fiscal requirements. Nothing to be sniffed at here. $1 million minimum combined net worth of all partners, and $400,000 minimum combined liquid assets of all partners. So you do need some considerable capital here just to get started with the gym. But they do offer a lot of supports as well, all the way through the process. In fact, they have people assisting during this process if you decide to become a franchisee. They help with site selection and location. You can see our real estate team assists with all aspects of site selection, from market trends on a national level to specific demographics about areas you're considering. They can advise you so you're prepared to negotiate the best lease terms possible, and our goal is to help you land at the perfect location to launch your gym. They also help with then the design and construction process. Our construction experts can help you get a handle on the process during all phases of your club's design and construction. Our club prototype and design manual guide you in a simple, straightforward and easy to understand format. They also help with training and development, providing a mix of online and in-person training for franchisees, key managers and staff before you open your club, and ongoing training and consultation after you open as well. So really hands-on support constantly all the way through the process, and even after you've opened up, they offer continued assistance. So you can see here, this is an overview of Crunch's success and the vision that they have as well for their growth in the coming years. They have a solid track record, they say, 225 plus open locations across the United States. Commitments to open over 500 plus franchise locations, 24 states and 5 countries as well outside of the United States. 1 million members they have plus across their various locations in the 5 countries. 6,400 plus median members, as we mentioned, and the leader, they claim, at least in the high-valued, low-price segment. $25.8 billion industry overall, 57 million members in the US, and consistently growing. So they suggest that this is a really growth industry and a lot of opportunity for expansion. So that's why they're trying to sell their franchise model. 82% of Americans don't belong to a gym, still, and 40% of health club users participate in group exercise. So that's an interesting point there as well. Group exercise classes seems to be a big focus of Crunch, and that seems to be a really important area when it comes to growth. So an interesting and dynamic industry, and lots of room, it seems, for growth. And the franchise model seems quite well suited to this, it seems, especially for international expansion, which is something that seems to have been underutilized, relatively speaking, in this industry so far.